Hi everyone, very good evening and welcome back to CrackGradeB. So in this particular class we are going to talk about the sources of finance, right? And we were discussing about the term loans. We'll be discussing about it. Okay, just wait, let me adjust the brightness first. Yes. So let's start talking about it. When we were reading about the term loans, we read the terms and conditions about it, right? Now we shall be discussing the things related to the repayment and the other general guidelines as well, that when should be the repayments and all should happen in regards to your term loans, right? So for the repayment related purpose, the loans are generally repaid over the granted period and generally installments, which are monthly, quarterly, half yearly or yearly. The duration for which you need to repay the loan, you can decide, right? That is going to be decided by the financial institution from which you have taken the loan. Moratorium in some specific but time-bound acquisition of assets, there is a recovery by bullet payment as well in one shot. So such kind of repayments can also exist where they are recovering you in one go itself. Moratorium is granted for principal repayments where the projects are large and the cash generation is likely to take time. So for example, interest might be taken from you, आपसे interest ले लिया जाएगा, but for the principal related thing, you might be given certain concession. कि ठीक है, if you can repay within this particular time period because there is an initial gestation period which is applicable, right? We do not have enough time. For example, we have started with a particular project and this project is going to take 5 to 7 years in order to become completely successful, right? So that is the case. Next is in cases like EMI, the financial burden is evenly spread out through interest component gradually goes down. From every installment, the accrued interest is carved out first and only the remaining amount is apportioned towards the principal. So these are the few things which talks about the principal related thing. Next we have the security related aspect, right? So in this particular case, long-term uncertainty, it makes the lenders very cautious and uneasy about the risk, and they will not provide the loan without securing it with the main assets purchased utilizing the loan. For example, we have the collaterals, right, that are taken for the security of term loans. Such loans are called as the secured loans. ठीक है, उसको क्या बोला जाता है? Secured loans. Now next thing is sometimes the lenders, they also ask for additional collateral such as personal assets from the promoters to ensure the strong commitments. Lenders prefer tangible assets as security, right? They also check the ownership of asset which is being used. For example, I can give you an example over here. Land and buildings, they will be considered as more good form of collateral, whereas if you will give shares, ठीक है, अगर आप shares दोगे, share is something which quickly loses its value, right? बहुत जल्दी जो है value जा सकती है. So in that particular case, this is risky security. So depending on to the kind of loan you are giving, the kind of collateral which is being taken, there are a lot of decisions which are taken by the financial institutions. For example, what shall be the loan to value ratio and all of it. Next, we need to talk about the loan amount. So when purchasing existing assets, the lenders conduct an independent valuation after allowing for a margin to account for value fluctuations. That is what I am calling as loan to value ratio. इसी को मैं loan to value ratio बोल रही हूँ, where they decide that what is the asset which has been kept as collateral, right? क्या asset को collateral की तरह रखा हुआ है, what is the value of it and how much loan you can provide on to that. आप उस पे कितना loan जो है वो दे सकते हैं. Okay. Next is for loans aimed at creating new fixed assets by the borrowers. The loan amount is determined based on the debt equity ratio which is set by the lender. This ratio indicates the proportion of debt to equity that the lender finds acceptable for financing the project. For example, whenever we calculate the debt to equity ratio, जब भी हम debt equity ratio compute करते हैं, we always say that 2:1 is something which is considered as generally as an okay one, right? But that can differ from industry to industry, because in every kind of industry there can be a separate industry threshold for debt to equity ratio. So while giving the term loan, the financial institution can decide on this particular matter as well. आपका financial institution इस मामले से भी आपको डिटरमाइन कर सकता है that okay, what is the amount of loan that should be given. Moratorium period, for example, during the times of COVID, when it was tough time, loan moratoriums were provided. A moratorium on the loan, it is a specified period during which the borrower is not obligated to make EMI payments of their loans as mandated by RBI. The moratorium period in loan postpones repayment and gives the borrower a grace period during which they can choose to not make EMI payments for a loan, and they do not have any repercussions for that, because these kind of moratoriums are provided depending on the situation. किस तरीके की situation है, because situation demands it. During the time of COVID, there were many people who were unable to pay the amount. ठीक है, बहुत सारे लोग थे जो amount pay नहीं कर पा रहे थे. So loan moratorium was the need of the hour, right? उस वक्त जरूरत थी उस चीज की. Then next we have conversion of loan into equity. So that is something which is usually not a planned course of action. Okay? This is not something which is thought of initially, but later on, because of these circumstances, such kind of things can be brought in onto the horizon. So मतलब क्या? Loan being converted into equity means what? Suppose the bank has, or bank or financial institution has provided the loan to our entity. Now we might be unable to pay off the loan. Just take an what you can say exceptional scenario. We might be unable to pay off the loan, so we are saying that we are unable to pay you the loan amount, but what you can do is you can take equity from us. आप हमसे equity ले लीजिए, right? So that is what conversion of loan into equity means. This is not something which is thought of initially. Initially ऐसा कुछ सोचा नहीं जाता है, but later on what happens is that this is something which becomes the need of the hour, and it can also be practiced, right? So unless agreed upon in the advance by both the banks and the borrowers, in such cases when the agreed term expires, the loan is converted into equity ownership of the borrower based on pre-agreed valuation method. Sometimes the lender has the option to choose whether or not to convert the loan into equity. Option होता है that it depends on to you as a lender whether you want to convert or you don't want to convert. Totally depends upon your choice. Next we have, however, there are situations where the quality of loan deteriorates and the borrower struggles to make interest payment or repayments. In such cases, when there is no better alternatives, loan may be restructured. तब loan की restructuring हो सकती है. As part of this restructuring, a portion or entire outstanding loan amount may be converted into equity of the borrower at an agreed price. So that's what I told you, that in the exceptional scenarios, when the borrower is unable to repay you the amount, then at that particular time आप जो क्या कर सकते हैं, आप लोन को इक्विटी में कन्वर्ट करवा सकते हैं. Next is shares obtained, and this is also something which is not usually carried out, right? ऐसे आपने बोला और उसको कर नहीं दिया जाएगा. Circumstances are checked. Bank also checks its profitability, whether the bank is going to be sometimes it gets high, right? The camera is adjusting itself, and I am not able to find out the reason for it. Wait, what we can do is we can reduce the brightness and then we can see how it works. Okay, I have to go out of the frame so that it will adjust to the brightness. So shares obtained through this particular process often have low marketability and they do not provide immediate returns to the lenders except for granting a seat on the borrower's board. Obviously, when you are not able to provide something back to your lenders, I have borrowed from the bank and now I am unable to pay the EMI. अब मैं EMI ही नहीं दे पा रही हूँ. So there is something which is very wrong with my working setup, right? कुछ तो है जो मेरे साथ बहुत गलत है. So if my entity entity is not able to pay its EMIs, then how you can say that we have a stable, how you can say that we'll be having a stable share price? We will not be having a stable share price, right? That is a consequence of it. So in this case, when the loans are converted into in equity shares, the lenders do not gain something very financially fruitful for them. ऐसा कुछ financially fruitful नहीं होता है, but the only thing which happens and which is considered as a good thing is that they get a seat onto the company's board of directors, so that now onwards whatever decisions will be taken, that can be taken up by the with the lender's approval, right? So that is something. Now next we have the working capital term loan. See, working capital का मतलब क्या होता है? This is the amount which are required for day to day affairs of my business. ठीक है, day to day functioning के लिए मुझे ये पैसा चाहिए. So when I take the loan for my working capital purposes, there can be, loan can be taken for different kinds of purposes as we know it, and we can take it for working capital purposes as well. So generally the banks, while granting the working capital facility, they stipulate that a margin of 25% would be required to provided by the customer, and hence the bank borrowing remains only limited to 75% of the security offered. That means they say whatever security you are going to provide to us, we will just what you can say, give the loan 75% of that, and remaining 25% we'll keep as a margin, so that in future if it fluctuates a lot, बहुत ज़्यादा fluctuate होता है, then we have a security to keep. In other words, against a security of rupees 100, the bank is going to give you a loan of only 75 rupees. The shortfall is generally treated as working capital term loan. This is to be repaid in a phased manner varying between 2 to 5 years. Okay. Next, okay, we can read this, we can give a read to this as well. So as a list of terms, conditions and requirements that are incorporated into the loan agreements. So these are all the conditions that are stipulated by the banks in the loan agreement. What are these conditions? For example, appointment of compliance officers and proper key managerial personnel, strong corporate governance, maintaining prudent financial ratios, that is debt equity ratio, reconstitution of the board, induction of independent directors, etc., etc. Few more conditions are there. Few more conditions are there, like prior consent or approval of the lender will be required. In case you are doing merger, hiving off, that means you are removing a certain part of your division, right? Restructuring new projects, equity expansions, etc. Statutory registration or approvals, additional funding by the promoters, consent required of the lender if there are any loans which are being repaid, okay? Submission of quarterly data, requirement of rating by independent rating agency, sealing on further borrowing, insisting on first charge failing, right? Pledge of promoter shares or collateral of personal assets, and restrictions on promoters' right to dispose their shares. What do we mean by this? So all these items can be included into your term loans in form of consideration or in form of additional conditions, right? There can be factors about all of these terms and conditions. Next, we have the advantages of term loans. So what is the benefit of having term loans? The interest that we pay, it is a tax deductible item, number one. That means we get the benefit of taxation over here. Term loans are negotiable, and hence the terms and conditions are not rigid. Negotiable means with the financial institution from whom you have taken the loan. That is negotiable. The term loans represent debt financing, and the interest of the equity shareholder is not weakened. That means the control that the equity shareholders have onto the enterprise is not reduced by virtue of using your debt capital. ठीक है, अगर आप debt capital use कर रहे हैं, so उससे आपके equity shareholders का interest कहीं नहीं जा रहा है. The lenders will have a collateral, and hence the loan is not a huge risk to the financial institution. Collateral acts as a security. ठीक है, it acts as a security that yes, the financial institution has given the loan, so they also have the security to keep, which they can realize later on as well. Since the borrowers will be making regular payment towards the principal loan amount and the interest, lenders will have a regular and steady income. Now, what are the disadvantages of term loan? What are the problems with it? See, if you are unable to make the payment, then your company's existence will be at stake. Debt financing increases the risk of financial risk. See, debt is the capital which you have to repay, right? You cannot say that I do not have enough money and I will not be able to repay. ऐसा तो आप नहीं बोल सकते हैं. In every kind of condition you have to repay, otherwise you will be engrossed in the insolvency bankruptcy proceedings. Okay, in addition to the collateral, the borrower will have to tend to the restrictive covenants imposed by the lenders. The borrowers will have to close the existing loans and must maintain the asset base. Since the terms and conditions are negotiable, there is a chance that it might affect the interest of the lenders, right? So, sometimes what happens is, now if the borrower is unable to repay the loan, okay, if the borrower is unable to repay the loan, then bank has to find certain mechanism to get the amount back, right? So sometimes they have to adjust as well. उनको adjust भी करना पड़ता है, only because the borrower is not having the capacity to repay. Borrower के पास में इतनी capacity नहीं है कि वो repay कर सके. Next is lenders will have no control over the company's affairs, and that is why the loan becomes more of a risky proposition. Next is we have debentures to do. Just wait and we will start with the debentures as next instrument. Yes, so now we have to talk about the debentures. What do we mean by debenture? So debenture is also which depicts a loan that you have taken from general public. ठीक है? I am trying to do that, right? And this is something which is not adjusting. The camera is automatically taking up the brightness. It usually don't do that, but I guess अभी ठीक है. Okay. So now debenture means what? It depicts the loan that you have taken from the public and you have promised that you will repay it. ठीक है? आपने promise किया है कि आप अब इसको repay कर देंगे. So when a company intends to raise the loan amount from the public, it issues debentures. जब आप public से loan ले रहे हो, term loan that you have sorry that you need to manage, but this is something which is out of my hand, right? And there is no manual adjustment for the brightness. Whatever I could have done, thoda sa kar diya hai maine, but you can focus on what I'm telling you, right? Anyways, you'll be having the PDF later on, but right now you can focus whatever I'm saying. So debenture, it is the loan amount that you take from the public. Now, just like any other loan that you take from the financial institutions as well, right? So in that particular case, what happens is the interest that you need to pay. Interest आपको pay करना पड़ेगा. That is also a fixed interest. Apart from that, everything is same. Over here, you are having a maturity during the entire duration. What you are paying is just interest, right? And suppose if I have issued the debenture for a 10-year period, मैंने 10 साल के लिए debenture issue किए हैं. So after the period of 10 years, I promise that I will pay you the amount back, whatever I was taken. Suppose I have a company and we have raised 10 lakh rupees worth of debentures. So I am saying that after 10 years, I will repay you the 10 lakh rupees. So this is how the principal amount is repaid, and meanwhile, the interest is being repaid at whatever intervals that is chose by the company. For example, half yearly intervals or yearly intervals, whatever has been chosen. So debenture, a person holding debenture or debenture is called as a debenture holder. Debenture, it is a document which is issued under the seal of company. That means company says that, dear investors, yes, we have borrowed from you and we are going to pay you for that. It is an acknowledgement of the loan. Just wait. It is the acknowledgement of the loan which has been received by the company. It bears the date of redemption as well as mode of payment of interest. That means what is the date at which redemption will happen, when the amount will be returned to the debenture holders, and what will be the duration of interest related payment. Okay? A debenture holder, it is the creditor of the company. Now let's talk about debentures in a regulatory sense, or the some pieces that we have picked up from the Companies Act. Debenture includes debenture stock, bonds, or any other instrument which evidences a debt. Debentures are instrument through which company raises debt for funding its activities. It is an instrument which acknowledges the debt. There is a fixed rate of interest which you need to pay whether you are earning profits or not. ठीक है, चाहे आप profit कमा रहे हैं या आप नहीं कमा रहे हैं, that doesn't matter. You need to pay the interest onto the debentures. Debenture binds the company to repay the money at a fixed time and also to repay the interest at scheduled time. Debentures are usually secured upon to the company's property and they include debenture stock. When I say they are usually secured, they can be unsecured as well. So there is no compulsion that debenture needs to be secured only. There can be two types of debentures, secured one as well as the unsecured one. Okay, they consist of debenture stock as well as the bonds, right? And debenture binds the company to repay the money at fixed time. That means if you have said that after 10 years you are going to repay the amount that you have borrowed by way of debentures, you need to do that. वो आपको करना पड़ेगा. Debentures may be issued on cash, for cash, on par, premium or discount. ठीक है, किसी भी वे में आप debenture issue कर सकते हैं. When the debentures are issued for cash, the entire issue price may be received on application or payable in installments. That means suppose if one debenture is having a face value of 100 rupees. So I can call the entire 100 rupee in one go, or I can call the amount in installments as well. Some amount on application, some on allotment, and then some on the another installment. Now let's talk about the types of debentures. There are different kinds of debentures. Number one, we have the secured or mortgage debentures. So these are the debentures which are secured because there is a collateral which is existing, asset of the company. For example, I have kept my machineries in form of collateral for the repayment of the debentures. ठीक है, मैंने machineries को collateral के form में रखा है. So the debentures which are backed by the assets of the company, they are called as the secured or mortgaged debentures. These are also called as mortgage debentures. The holders of secured debentures, they have right to recover their principal amount with the unpaid amount of interest on such debentures out of the assets. That means if the debenture holders will not get their principal payment, or if they will not get their interest payment, they have got all the rights to sell the asset of the company which was created as a collateral, right? On the sometimes it is also written that a charge is created onto the asset of the company. Charge का मतलब that particular asset is responsible for the repayment of debenture along with its interest. Next we have the unsecured debentures which do not carry any security with regard to the principal amount or unpaid interest. They are unsecured debentures. That means we can have debentures in such kind of format as well. Right. Next we have convertible debentures. So these are the debentures that can be converted into equity on the expiry of pre-decided period. That means we can say that once 5 years will be expired, these debentures will be converted into equity shares. So such kind of thing is also possible. Then we have non-convertible debentures. They are not converted into shares of the company, and at the time of maturity, the company repays the cash amount only. Then we have redeemable debentures. These are the debentures which are issued for a fixed time of period. For example, if I have issued the debentures for a period of 10 years and I am saying that I will repay this amount after 10 years, then this is called as the redeemable debentures. When you are promising that you are going to repay the amount, आप repay करोगे. Non-redeemable debentures, these are the debentures which are not redeemed into the lifetime of the company. They are paid back only when the company goes into liquidation. So what is What is the benefit of investing in such kind of non-redeemable debentures? They offer a high amount of interest. See, there is a risk-return trade-off that we study. In risk-return trade-off, we study that as the risk goes up, so does your return will also go up, right? So, in this particular case, non-redeemable debentures, we are not redeeming it till the time company goes into liquidation. So yes, there is a high amount of risk, and that is being compensated by providing the high amount of interest as well. The company may issue debentures with an option to convert such debentures into shares at the time of redemption, or either wholly or partly. So there is an option which exists. Okay, convertible debentures can be issued only if the special resolution is passed. See, special resolution, there are two kinds of resolutions which are passed in the meeting of the company. One is called as ordinary and the other one is called as a special resolution, right? Ordinary resolution, you just require that the members who are present and voting, more than 50% of people should say yes for the ordinary resolution to pass. But when we talk about the special resolution, we want that 3 times the people who are saying no and the people who are saying yes, they should be in the ratio of 3:1. That means 75% or the more people who are present in the meeting should say yes for the proposal, and that is when the special resolution would be passed. Now, debentures do not carry any voting rights. They are not allowed to decide on any matters of the company because you are not contributing capital. You are not taking any kind of risk, right? So, that is why we will not be providing you the voting rights. हम आपको वोटिंग राइट्स नहीं देंगे. Next, we have features of debentures. So first, what are the features? Number one, it is credit instrument. A debenture holder is a creditor of the company and is entitled to receive the payment of interest. Interest rate, in most of the cases, the debt securities, they promise a rate of interest which is payable periodically to debt holders. The rate of interest is denoted as coupon rate. Next, we have collateral. So, debt issue may or may not be secured, and therefore the debentures, such securities may be called as secured debentures or unsecured debentures. Then you have maturity rate. So, all debt instruments, they have fixed maturity rate, whether these will be repaid or redeemed in the manner specified. Voting right means debt holders are the creditors, so they do not have any kind of voting right. Face value. Face value means the basic value for which the debenture is being issued. What is the face value for which the debenture is being issued? That is what your face value is. Priority in liquidation. So, in case of liquidation of the company, the claim of debt holders is settled in priority over all shareholders. That means before you are paying anything to the preference or equity shareholders, you need to pay the amount to the debentures, right? So, there is a windfall mechanism, as I have also discussed. First, you need to pay to your debenture holders, then you are going to pay to preference shareholders, and you need to pay to your equity shareholders. So, this is the priority into which you are going to pay. In case of any issue of debenture by a government company which is fully secured by the guarantee given by central government, the requirement for creation of charge does not apply. So, when the government is saying that please do not worry, we will pay for this particular amount, then you have to go with that. In case of any loan taken by subsidiary from any bank, financial institution that is created on the property or asset or holding company. Next, following classes of companies may issue secured debentures for a period exceeding 10 years but not exceeding 30 years. So, these are the companies which are allowed to issue longer tenure debentures as well. The companies engaged in setting up infrastructure projects, infrastructure finance companies, infrastructure debt fund, non-banking finance companies, and companies which are permitted by Department of Central Government or by RBI or National Housing Bank to issue debentures for a period of exceeding 10 years. If you will see clearly, in all these cases, they are the infrastructure companies. Okay? In case of infrastructure, you require high amount of investment and the gestation period is also large. So that is why I am going to keep this particular session short up to this thing only. And this is it for today. Thank you so much for joining in. And if you did understand anything out of this particular lecture, don't forget to give us a thumbs up. Good night.